Hey guys, Mike here. So, oh boy, what a day on Friday. And I gotta say, that's probably one of the biggest spikes in yields I have seen in a while. And it was amazing to watch the SPY and the Qs hold up for as long as they could. Of course, IWM, which we'll get into, crap the bed as usual. We'll also get into something very important you're probably noticing, or maybe not noticing, but hearing a lot about. And that is breadth in the market, right? We got a whole lot of concentration. I'll show you how you can actually spot that very quickly. And then we'll go over a few stocks to make sure you watch out for next week. Plus, we have earnings, and next week is FOMC. And we got a whole lot of red folder news, or news that can absolutely shake the market up. So keep that in mind. But of course, I got to ask, did anybody watch the Roaring Kitty live stream or whatever? And I was happy for my buddy because I told you about him being in the calls. He actually decided to hold overnight. GameStop tanked overnight and then ran up at like 10:30, he told me, and he was able to get out for the exact same price. He decided to dump it and say forget about it. So I was happy for him by that, because after that it tanked. And I even read, I know this one person, but I read their post, they were up $270,000 in calls, and they wanted to hold through Roaring Kitty's live streams. They thought he would pump it and stuff, and of course it just absolutely crashed and burned. I personally, I tried to watch 5 minutes of that stream just to say I watched it. I couldn't do it. I don't know how you do it. I've actually never seen the guy before on a live stream like that. So yeah, let me know if you watched it, what you got out of it. But yeah, that was crazy. And what was even crazier was GameStop, right? They went out of their way to screw their shareholders. They were supposed to report earnings on Tuesday. They moved it back to Friday just so they could dump those shares on people, because they did another share offering as well as reporting bad earnings. No surprise there. But I wonder, like, I'd love to be a fly on the wall in one of those meetings to say, sir, we're about to report bad numbers because we're, basically a dying company here. But, I'm pretty sure a lot of our people who shop with us, they probably own shares and they probably bought options, and they're way up. If we do this, we're going to just kill them, because after Thursday night, it was just roaring. I think it was up over 60 at some point in time throughout the night. And then when they announced that in pre-market, everybody just watched their options just dwindle down to almost nothing. Hopefully they got out on the 10:30 pump. Hopefully you did. But a lot of people tried to hold through, but I just couldn't. I couldn't believe it, because I would say they're doing what's best for their shareholders, but are they really? Because they're issuing more shares and diluting the current shareholders, right? So I don't know. It's kind of a double-edged sword, right? But yeah, it amazed me how far they went on a limb to do that to people. Let me know if that upsets you, or you were like, good job, GameStop. Now, of course, what caused the big spike in yields and the dollar, by the way, you had unemployment actually rise to 4%. Labor participation actually came in a little less, but it was the non-farm payrolls. Oh my goodness, 272K they're trying to make us believe, versus 180K expected. Let me know in the comments if you believe that number, you think it's going to be revised down. I'm going to revise down. But just look at that old FU candle right there on the 10-year, and it held up all day, surprisingly. Held up over 3%. Who does not like this? IWM immediately drops almost 1.5%. It was a nice little rally back up. It was a fake out, and then just sold back off the rest of the day. Again, S&P and Qs we'll get into held up decently. But when you look at IWM, simply put, it cannot break the 200 level. If it breaks 200 level, absolutely 192 is going to come into consideration. If that happens, I'm expecting, you don't have to exactly test 200, but it's climbing down there, as you can see, slowly but surely, trying to test that level. And so again, when you look at it, maybe you get this formation, maybe it pops up from there, and away we go. It'll break that trend line. But that's just what we got to see, guys. I mean, again, you need the 10-year to come down for sure, and you need to start acting correctly with the 10-year, have this inverse relationship. Another thing is it's kind of pinned really almost right at the 100 now. It's already lost to 50. Right now, about to lose the 100. Now, S&P, you can see, held up well, ended up red on the day. And again, this is one of those things where, we're sitting there and looking at it going, well, on the moving average, we got our bounce off to 50. We're still moving up. It's the Qs, though, more than anything, that's really holding up, because there's so much concentration in these larger stocks, and I'll show you in just a second. But this one said at one point in time, it set an all-time new high, if I'm not mistaken. And, looking at this one, is it going to end up obviously staying above that midline, or are we going to break down below that midline? The S&P is nowhere close to the midline. But what was shocking about the move, when you look at it, you're like, man, what's holding the Qs up, especially when it went green? Because The S&P was much stronger, right? Because you had financials, you had industrials, healthcare, large caps besides just the ones right below, which are the Mag 6, 7, whatever you want to call it, which were actually red on the day as a whole. And so it was amazing to watch what was holding these, especially the Qs, what was holding the Qs up. And again, everything else, though, was red. I mean, energy on down, the semiconductors, everything else. Nvidia held up well, which we'll get into in just a second. But when you look, it's the breadth that's the amazing part, right? Here's where it was in the middle of May. That was the stocks, the percentage of stocks above the 200-day moving average. Here's that percent now. Now, why am I not surprised when I see this kind of stuff? Because this is why I put, breadth in the morning news brief on May 23rd, just 2 weeks ago. You can see it. Percentage of stocks above 200 moving average, 73%. S&P was 70% right there. And we were actually somewhat down at that point in time. And then when you look today and you go, oh, let me pull up over here. Wow, so we went from 73 to 60, right? And then the S&P really isn't down that far. Not as bad as you think it would, but the Qs are down pretty far, and you can see on the breadth. But again, what's it doing? All-time new highs, right? It's up. What else are you seeing, though, that confirms this? You're seeing bearish divergence from the RSI to the QQQ, right? All-time new highs or higher high. And then on the RSI, we're sitting there at lower highs, and you can see it on the weekly as well. So, definitely got the bearish divergence going on for sure. But again, that could take weeks to play out, and it really is going to depend a lot on Nvidia, right? Nvidia held up well, bottom of this channel, just bouncing, still holding. But even if this breaks, you're just looking right around that level from like 1188 to 1195. That's where it's been holding support, kind of building out support there if that happens. And again, it's all about this split. And when it comes to the split, remember, guys, it's about what the market is doing. So if the market's tanking or heading down for sure, Nvidia is definitely going down with it. I know a lot of people want to pull back on this so they can get it even cheaper. But as of now, it should be around 120 bucks. And so when the split happens, and the one thing that's interesting, man, short sellers, this is the number one short seller killer, right? Well, short sellers right here are piling in. Short bets against Nvidia total 34 billion. That right there is more than Apple or Tesla, almost double it. Okay, and you can see right here, here's the short bets against them, right? So Tesla's got a big one, Apple, but then look at Nvidia. And again, it's caused the most money lost for these short sellers, right? It used to be Tesla, now it's Nvidia. And I'll tell you this right here. I love this tweet right here from Ian McMillan. And it says, first $100 million market cap, 1781. First $100 million market cap, 1878. First $1 billion market cap, 1924. First $100 billion market cap, 1995. First trillion was 2018. And according to him, I don't know if I agree with this one, but it says if you're under 40, you're probably going to see a $100 trillion company in your lifetime. I don't know if it'll get that high. But this goes back to what I was saying the other day when I say, I understand people say, oh, there's no way Nvidia gets to 5 trillion or whatever company, no matter, even if it's not Nvidia. And I'm like, look, people were saying that the same thing in 2010 about a $1 trillion company, in 2000 about, whatever, was it 100 billion in 1995? That's always been said. But the problem, what have you seen in the stock market? Why you keep seeing these companies, now you see multiple $3 billion companies, is the concentration. Right? There's a reason why if you pull up a chart of small businesses in the U.S., I don't know how it is in other countries, they're just been declining for a reason. All these conglomerates, there's no such thing as a monopoly anymore in the U.S. at all, right? Because the people that would make that decision are totally bought off by these companies. And so you just keep seeing it filter like this, get narrower and narrower and narrower, right? And so now you're going to end up with what? A lot of these companies, just really why they investigate the AI deal. Because if AI would be such a big deal and make them more innovative and all this good stuff and make them even more money, well, you see how much these chips are going for. How many companies can even afford these kind of chips or the equipment needed to generate that much revenue in AI? What these larger companies we know do, for a perfect example, is if they can't buy you, they just bankrupt you. That's the way it is, right? So, I think Walmart's famous for that. Nvidia is going to do it. And, the funny thing is, on a side note, look at BlackRock. BlackRock's doing what? They're buying up as much Bitcoin as they can get, but they're also buying the miners now. You can guarantee, and that's very dangerous. I'll have to do a whole nother segment on that one. I can't stand that here and that at all, because all they're going to do is they're going to try to corner the market on this thing, and they're going to be able to manipulate the price like crazy, and they're going to bankrupt all the other smaller miners they can't buy. That's a sad thing, but that's just the way it is in America. Again, I don't know how it is in Europe and Canada and Australia, anything like that, so let me know in the comments. But a lot of this will depend on this right here. If it even comes close to this forecast, and usually forecasts are totally wrong, of global AI chip market, of the global AI chip market. Compound annual growth rate of 31.2%, forecasted market size for 2033, 2033, excuse me, 341 billion. If that even comes anywhere near close, right? Yeah, there's definitely going to be some 5, 6 trillion, 7 trillion eventually, right? That's going to happen because of just all the concentration and all the money flowing into these larger companies. Okay, so just kind of keep that in mind. Let me know your feedback on that. Few stocks to watch here. Watch Celsius. If it comes down that trend line right there, it might even bounce before that. It started to try to bounce. But when you look down at the bottom, this one moves fast. This one has big moves ups and downs, as you can see right here. But you can see the stochastic and the RSI at the bottom is trying to turn up. Hadn't made it there. You need to get over 20 again. The RSI got basically almost oversold on the last bounce. We're not quite there yet. If it hits that trend line, we should reach the oversold territory. And this one bounces, like I said, really fast. And if we go over to the weekly, you can kind of see the same thing where momentum's rolled over, but it's trying to turn. And once it turns, because this is a low float stock, everything, it's probably going to have a big move up. If it breaks that trend line, obviously, big move down. Now, Palantir came up in the same area we talked about where people love to short it, right? And that's where it's kind of stalled at right now. We'll see if this starts to come back down. Obviously, this will move with the market, right? If the market's moving down big time, this one's probably heading right down with it. Probably end up mitigating some of those fair value gaps, which are those daily fair value gaps. But the other way to look at it, if we put some lines on it, it's almost up to this resistance where it's already rejected twice. So we'll probably get a third rejection right there. Didn't quite hit it today. And maybe it just starts to wedge again, right? And this is one of those ones we talked about. It can go all the way down to, between $15, $17 if it does break down below that bottom line right there. Feel that gap and stuff right there. But again, it could wedge. If it breaks out, then you're talking about $25 to $29. Just keep that in mind. Now, BABA, this one right here, because you always ask me about it, still sitting there trying to hold that trend line or support line, I should say, as support, not trying to come back down in this area. It was in forever. But you can see at the bottom, momentum has stalled for sure. The RSI is going below 50. Stochastic's kind of stalled out right there. So you just need this rate. You see what happened on the last big move right there? That's what you need. Okay, you need that RSI to come over that moving average, get over that 50. Stochastic turn up, get over 20, 30, and then start building momentum back into this. All Chinese stocks are pretty much looking like this. Now, comes to earnings. You have a few next week, right? I mean, Academy, Sports Goods, that's going to be one to watch out for. Oracle is going to be another one. You end up with Broadcom, right? Another semiconductor. And then Dave & Buster's. Then you'll have Adobe and RH to watch out for. I think RH is one of those ones that's beat down. And see if it bounces like Lulu and Ulta. And as far as the moves, you can pause this and look at this if you want to. But here is some very big expected moves. Remember, if you buy a straight call or a straight put and you're not beating the expected move, you forget about it. All right. So you have Dave & Buster's, but Fuel Cell has an enormous one, like plus or minus 17. RH up there at plus or minus 14. Avgo is only plus or minus 7. Oracle's plus or minus 7. So be careful on that. And then a boatload of economic data. Okay, nothing on Monday. 10-year bond auction sitting there on Tuesday. Core CPI month-over-month. Wednesdays is going to be unbelievable, right? CPI year over year. And then you got your FOMC at 2 o'clock. So, I mean, you know they're not going to raise rates. You know that. And I don't see them cutting either. But it's all about, how the market wants to perceive what they're saying and everything. And then on Thursday, you got core PPI and then PPI month-over-month. Then unemployment claims, okay? Then you have a 30-year bond auction on Thursday as well. And then Friday, preliminary university admission consumer sentiment, which if the market's going up, maybe it looks good. But again, just loaded with news next week. So again, I don't expect any rate cuts or anything, but they're just listening to see like, are they talking about September? Are they talking about September? Because that's where they're trying to bring this on. But if that employment data is accurate, wink, wink, then probably not. Because it's crazy how you get all this soft employment data coming out, and then that one is like, oh no, we created way more jobs. Then you get a report coming out saying, oh, they've overestimated these jobs for like the last 6 months by 600 to 700,000 or some crazy mess. So hard to even know what to believe on that. But it ain't about what we believe. It's about what the Fed's getting and what they believe. Like that's the big thing. See, and so we'll see. You're just waiting to see if the market is going to go on this whole. They're going to start rate cutting, and if September again, watch September. If September's rate cut starts to increase, they really think they're going to do that. That's when the market tries to think ahead. That's what they say, and try to move it up at least for June, because July is actually usually pretty bullish. But you know, at least the first 15 days are. I'll go over that for you as well. So hopefully you got something out of this video. Make sure you watch Saturday's video, at least the first like 10 minutes of that one right there, because you'll definitely learn something on that. Hopefully, and I like get your input on that as well. You don't have to watch the rest of it, but just the first 10 minutes and stuff. I think you might be a little surprised. And I hate when people are trying to pull the wool over people's eyes. It really bothers me. So anyway, hit that like and subscribe button on your way out. Really appreciate you guys watching, and I will see you guys tomorrow.